Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario where we're looking for a double 1-2, then inside blue 3 we're looking for 1 2 3 4 5, finish 3, triangle in wave 4 here, then another 5 wave structure, flat in wave 4, ending diagonal here in a wave 5 to finish the green wave 3 for then a wave 4. In this wave 4 we have two scenarios that I show you, but most important is that this is the target area for a wave 4 where the 0.236 has already been hit over here. The invalidation for this wave 4 is the 0.618, which is sitting at 33.7k, and the target area for a wave 5 can be seen over here. Now as you can see, we are already inside the target area for a potential wave 5, 46.1k to 55.6k, and we have a rejection over here. In general, anything between 46k and 55.6k is potential wave 5 target area, right? But in this case we are still looking for higher prices to come, moving towards that 50k area. If we then zoom in to the two scenarios for a potential wave 4, then Stuba in Discord has been cooking during the live stream yesterday. I already showed his two scenarios on the live stream yesterday as well, but he was thinking about either a potential flat over here or a potential triangle, which I think are great scenarios for this wave 4. We start with the flat scenario here, where this is then the end of your wave 3 and we look for a flat in a wave A, complex structure in a wave B, and then we're looking for a wave C towards the downside. The most common target area for your wave B is between the 1.236 and the 1.382, taken from the high to the low of wave A, which as you can see has been nicely respected. A wick above is no problem, and then we're looking for an impulse to the downside, and the impulse of course has to be a 5-wave structure where we are then looking for a wave 1, 2, 3, 4 and a wave 5. Most important in this scenario is the 0.618 here, sitting at 44.4k. The common target for a wave 4 is the 382 to the 05, taken from the end of 2 to the low of wave 3 over here, and we also have a naked point of control right there in between the two levels at 43.525, so for some additional resistance. In this scenario, you then want to see another move to the downside, price moving below this wave 3 and also very likely moving below the triple bottom that we have over here to then grab the liquidity. The common target for a wave C is between the two 1.618s. The one is a trend-based sub-extension taken from the high to the low of A to the high of wave B, and the other one is a Fibonacci from the low of A to the high of B, creating this area on the chart, which is between 40.5k and 35.3k. Now that of course is a very big area, so to make it a bit more precise for support areas for price, we have the triple bottom of course, 41.50, and then this very important yellow box sitting between 38.6k and 39k. The second scenario is a triangle in wave 4, where wave 3 is finished. We look for a wave 4 to finish and then a triangle where we want all of the waves to be zigzag family structures. So we then have a zigzag in wave A, which is correct. Then we have a double zigzag in this wave B over here. Then we look for another zigzag to the downside in C, then eventually D and E. The common target area for wave D is between the golden pocket and the 886. And what is interesting about this area is the blue resistance box that I have over here between 45.9k and 46.7k, after which we then want to see a rejection to the downside in wave E before then continuation. So in this scenario, we want higher lows to form and we don't want to see this low being taken. Now it is still a little bit early to call a triangle. Let's see if price can first hit that 0.618 as mentioned just now. That would give more confirmation for price to move towards the upside. For this scenario, we of course want wave C to be a 3-wave structure in an A, B, C to the downside, which then leads us to this scenario here, where we then have a wave A to the downside, a wave B, and then a 5-wave move to the downside in a wave C, where the 1.618 is a target for a wave C, and as you can see, nicely respected. Now what's interesting in this scenario is that this high over here hit the 0.382 Fibonacci, which is less common for a wave 2 and more common for a wave B or a wave X, which does increase the probabilities a little bit that the move coming after is a wave C. Also, when we zoom in to this diagonal structure over here, this move, this grind to the downside, then it is very, very difficult to count this bearish in an impulse to the downside. I actually went to the 5-minute this morning to observe this structure over here. And if you want to count this impulsively, and then a potential 1, 2, and then another 1, 2, and then a 3 to the downside, becomes a bit of a problem, because we can only count this as a diagonal here, right, because of all the overlap. But in a diagonal, wave 2 and wave 4 have to be zigzag structures, meaning a 535 or double zigzags, triple zigzags. But by all means, wave 2 and 4 are never going to take the low of a wave 1 or a wave 3. The thing here is that this wave 1 is at the lowest point between this and this low, right? So this wave 1 has to end here, because a wave 2 has to be a zigzag and is not allowed to take the low of 1. Same is true for this wave 3 with this wave 4. But you can see how awkward the position is of this wave 1 over here, right? This then has to be some sort of a zigzag structure, which doesn't look like a high probability move, and same is true for this wave 3. And besides all of this, it is also an expanding structure, because you pull a channel from the low of 1 to the low of 3 to the high of 2. Wave 4 preferably doesn't hit the high of the channel, because that means it's then an expanding structure, not a contracting structure, as the trend lines are not converging. And an expanding diagonal is less common / rare. So therefore, the probabilities are not high for this to be an impulsive structure to the downside, increasing probabilities that all of this is corrective, which therefore increases probabilities that the correct count is either an ABC or a WXY, with the move ending on that high over here, which then leads us to this scenario where the end of B is here, and we are then looking for a 1, 2, 3, 4, 5 wave move, preferably finished in this scenario, and we are looking for a move to the upside, where of course in this scenario you do want to hit the 0.618, which is sitting at 44.6k. If we then go to the bearish scenario on the medium time frame, then of course we're looking for this wave 5 to be finished and the start of a bigger corrective structure to the downside. If we zoom in to the end of that medium time frame impulsive wave 5, then we have to end it with a expanding diagonal, either this one here and a 1, 2, 3, 4, 5, or one starting here and a 1, 2, 3, 4, 5. But in both cases, we're going to be looking for an expanding diagonal, and an expanding diagonal remains a very rare structure and is never preferred unless all of the other stuff fails, right? Now this expanding diagonal by all means does look quite nice when you look at the targets, 886, 886, those are common for a 2 and a 4, wave 3 to the 1.618, common for 3, WXY in wave 5, as all of the waves have to be zigzag structures. This is your common target area for wave 5. So that works as well. It's just that the scenario itself is very rare and therefore never carries the highest probabilities. But of course, in this scenario, you are always going to be looking for an impulse to the downside, right? Because we are looking for bigger corrections to the downside. So here, we are then looking for a wave 1, 2, 3, 4, 5. Common target for 4 is the same, right? 43.2 to 43.8k. And the 0.618, the invalidation, 44.4k, taken from this high to the low over here. So that is definitely one to keep an eye on. You can also see the vertical lines on my chart, the fib times. These are taken from the low of 1 to the high of this wave 2 to compare wave 2 with wave 4. Now wave 2 is very, very shallow. That is interesting. So wave 4 might be more deep as well. And we have, of course, the daily naked point of control above price at the moment, which would be attractive to hit and then observe the reaction. But at the moment, this wave 4 is ranging behind the 0.382, which would be a minimum target for a wave 4. However, usually a wave 4 is longer than a wave 2, which means longer than the 1-to-1, which is currently sitting on Saturday, the 13th of January, which is today at 5:30 p.m. Central European Time. If you look at the range, then it is a beautiful range, right? Up, down, up, down, up, down. Another deviation coming back into the range, finding support at the lower end of the range, where we also had this target box over here acting as a bit of support, including the low of the range. Beautiful bounce. Point of control over here now as resistance, sitting at 43.6k. Another resistance area here is the white box between 44k and 44.4k, which of course is important to escape the range and increase the probabilities for price to move to the upside. Now we also hit the 886 taken from the low to the high over here. Always an interesting area, and what price does like to do after hitting an 886 is moving to the golden pocket, where then we can observe the reaction and see if we get any form of continuation or a move to the downside and continuation to the downside. Now interesting confluence with the golden pocket is that daily naked point of control at 43.5k, so that's definitely an area that I'm going to keep my eye on. We also have bullish CVD divergences over here, higher low in price, lower low on this CVD, but I would personally prefer to see local CVD divergences on, let's say, a 15-minute time frame. That would give me more confidence than the higher time frame bullish CVD we have over here. If we then finally look at the probabilities of the different scenarios, then generally we are in bigger correction territory, right? Between 46k and 56k is potential wave 5 territory for much bigger corrections to the downside. So therefore, manage your risk and your positions very, very well. On the medium time frame, however, an ending expanding diagonal in Elliott waves is simply rare. I can't make it better or worse than it is. It's just Elliott wave probabilities. It's not what I prefer or not prefer. It's just Elliott waves, right? It's never preferred, it's always rare, and therefore it only becomes the highest probability scenario unless all of the other stuff fails. However, patience for the local confirmation, right, hitting that 618 for example, is a good idea. On the low time frame, the 382 touch that we have over here, right, at 47k is more common for a wave B and less common for a wave 2. This increases the probability slightly for a wave C to the downside. However, probabilities increase when hitting that 0.618, right? So that is something to keep an eye on. And then generally, patience over here also throughout the weekend is a very good idea. Waiting for the range to form, which is always something that I love to do after bigger moves. Just wait for the range. It will give us all the information. I'm not here to catch an absolute low or an absolute high. I'm here to catch the middle part of a move and grab those percentages in profit. Wait for price to show its hand. The 0.618 is very, very important locally. That would give us more confirmation of a move to the upside. And if price takes the lows, we continue to observe what happens next, right? So patience to see what the weekend gives. Enjoy your weekend. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.